Good morning, everyone. Welcome to the market opening bell for Thursday, November 20th, 2025, your 10-minute guide to the stock market. The market remained cautious ahead of Nvidia's earnings release after the close and the revised U.S. September non-farm payroll data. Hong Kong stocks traded with a downward bias throughout the session. The Hang Seng Index opened 24 points higher and climbed as much as 115 points to an intraday high of 26,045 earlier on. But the rally quickly faded. In the afternoon, the index fell 187 points at one stage to a low of 25,742 before a mild recovery. It finally closed down 99 points or 0.4% at 25,830, marking the fourth straight day of losses with a cumulative decline of 1,242 points or 4.6%. The X-share index fell 23 points or 0.3% to 9,151, while the Hang Seng Tech Index dropped 38 points or 0.7% to 5,606. Total market turnover amounted to 211.4 billion Hong Kong dollars. Mainland-related trading reached 83.946 billion dollars in total. Southbound Stock Connect recorded a net inflow of 6.591 billion Hong Kong dollars, slightly lower than the previous day's 7.466 billion dollars, and marking the third consecutive session of declining daily inflows. Southbound investors were net buyers of Xiaomi to the tune of 2.394 billion. Alibaba 2.096 billion, the CSOP Hang Seng Tech ETF 667 million, Hua Hong Semiconductor 361 million, CNOOC 252 million, Ganfeng Lithium 168 million, Xpeng 145 million, and SMIC 101 million. On the selling side, the tracker fund saw a net outflow of 1.484 billion, followed by China Mobile 131 million and Tencent 103 million. Notably, southbound funds have now bought Xiaomi on a net basis for 16 consecutive trading days, totaling $13.054 billion, and Alibaba for 5 straight days, totaling $11.096 billion. From a technical perspective, the Hang Seng Index continues to face resistance near the 26,000 level. Immediate downside support is seen at the 100-day moving average around 25,612 and the November 5th low of 25,496. Overall, on the mainland, the three major Asia indexes opened slightly lower and traded mixed for most of the day. Banking stocks helped the Shanghai Composite stabilize, while the Chinex briefly rose more than 1% before giving back nearly all the gains, only to edge higher again into the close. The Shanghai Composite finished up 6 points or 0.2% at 3,946. The Shenzhen component ended basically flat at 13,080. And the Chinex closed up 7 points or 0.3% at 3,076. Combined turnover on the Shanghai and Shenzhen markets reached 1.73 trillion yuan. The renminbi central parity rate against the dollar was set 16 pips lower at 7.0872. Kuaishou reported third quarter results that comfortably beat market expectations. Both total revenue and adjusted net profit posted double-digit growth, while user engagement reached a new all-time high for the third consecutive quarter. AI applications have expanded into content creation, e-commerce and marketing, becoming the core growth driver. Although live streaming revenue fell slight pressure from the macro environment, robust growth in e-commerce and overseas operations more than compensated. Net profit for the quarter came in at 4.488 billion yuan, up 37.3% year-over-year, with basic earnings per share of 1.05 yuan. On a non-IFRS basis, adjusted net profit reached 4.986 billion yuan, up 26.3%, delivering an adjusted net margin of 14%. Adjusted EBITDA grew 37.2% to 7.653 billion yuan, and gross margin improved to 47.5%, thanks to a higher contribution from high-margin e-commerce and advertising, as well as AI-driven efficiency gains. Total revenue was 35.554 billion yuan, up 14.2% year-over-year. Kuaishou's e-commerce GMV exceeded 385 billion yuan, up 15.2%. Average daily active users topped 416 million, up 2.1% year-over-year, and monthly active users exceeded 731 million, up 2.4%. During the earnings call, CFO Jin Bing said the stronger-than-expected development of the Kling business will lead the company to continue increasing investment in computing power and talent. Full year 2025 capital expenditure is now expected to grow at a mid to high double-digit rate year-over-year. Kling alone is projected to generate around $140 million in revenue for 2025, well above the original $60 million target. Despite the higher spending, management remains confident of improving the full-year adjusted operating margin year-over-year. Kingsoft Corporation faced a more challenging quarter. Both revenue and profit declined, primarily dragged by a sharp drop in the gaming business, although the office software segment continued its strong growth momentum, supported by AI applications and rising user engagement. Total revenue was 2.419 billion yuan, down 17% year-over-year, but up 5% quarter-over-quarter. Office software and services revenue rose 26% year-over-year to 1.521 billion yuan, accounting for 63% of the total. Gaming and other revenue plunged 47% to 898 million yuan. Profit attributable to owners fell 48.5% to 213.1 million yuan. Looking ahead, the company expects full-year office revenue to exceed 6 billion yuan and plans to launch new titles, including Goose Goose Duck and a China version of Angry Birds between 2025 and 2026. Kingsoft Cloud delivered results that significantly exceeded expectations. Revenue growth accelerated and the company posted its first ever adjusted net profit while sharply narrowing its net loss, driven by explosive growth in public cloud services, particularly AI-related revenue, and strong contribution from the Xiaomi Kingsoft ecosystem. Total revenue reached 2.478 billion yuan, up 31.4% year-over-year, with public cloud revenue surging 49.1% to 1.752 billion yuan. AI-related billings alone amounted to 782 million yuan, roughly doubling year-over-year. The company now guides for full-year revenue above 9.5 billion yuan, with the AI segment expected to grow more than 40%. U.S. market staged a late recovery. The Dow closed up 47 points or 0.1% at 46,138 after swinging between a gain of 207 points and a loss of 186 points. The Nasdaq ended 138 points or 0.6% higher at 22,564, and the S&P 500 rose 24 points or 0.4% to 6,642. The Nasdaq Golden Dragon China Index, however, fell 1.5% to 7,673, with Alibaba's ADR down 0.5%. Nvidia set to report after the bell finished the regular session, up 2.85% at $186.52, making it the strongest Dow component. Alphabet surged 3% to another record high after unveiling Gemini 3, described as its most intelligent AI model to date, featuring industry-leading reasoning capabilities. Overnight reports emerged that the peace framework between Ukraine and Russia could be reached as early as this week, reigniting hopes for a ceasefire. Combined with rising U.S. crude inventories, oil prices dropped more than 2%. Finally, a quick reminder of Philips Securities' latest offer. New clients who open an account on or after November 1st, 2025 will enjoy a flat 50 Hong Kong dollar commission for same-day purchases of the same stock code, regardless of the number of trades or amount, covering all Hong Kong Exchange products including ETFs, warrants and CBBCs. Our stock pick today is Samsonite, stock code 1910. Samsonite's third quarter results for 2025 showed a clear improvement compared to the second quarter, mainly benefiting from optimized sales channels, effective cost control, and continued brand investment. For Q3 2025, the group recorded net sales of $872.7 million, representing a year-on-year decline of 0.6%. On a constant currency basis, net sales fell 1.3%. The decline narrowed significantly from Q2's 4.8% reported and 5.8% under constant currency, supported by sustained global travel demand, strong new product launches, and high-profile marketing campaigns. Despite pressure from U.S. tariffs, the gross margin in Q3 rose 30 basis points from 59.3% a year earlier to 59.6%. This improvement was primarily driven by a favorable product mix resulting from higher contribution from the Tumi brand and the direct-to-customer DTC channel, as well as successful tariff mitigation measures in the U.S. enabled by the company's strong procurement team, scale advantages, and close cooperation with long-term suppliers. Marketing expenses in Q3 amounted to $53 million, down 4.9% year-on-year, reflecting the group's adjustment of advertising spend to appropriate levels in different markets. As a percentage of net sales, marketing expenses accounted for 6.1%, down 20 basis points year-on-year. Profit attributable to equity holders in Q3 was $73.5 million, representing year-on-year growth of 11% and quarter-on-quarter growth of 5%. Although net sales of travel products fell 4.5% year-on-year, net sales of non-travel product categories rose 7.4% year-on-year, demonstrating the group's ongoing efforts to expand beyond core travel-related categories and capture broader consumer demand. The proportion of non-travel product sales increased 270 basis points from 32.9% in the same period last year to 35.6%, driven by strong growth in non-travel products across multiple brands, including Gregory, Xiaomi, and Samsonite, highlighting the significant long-term growth potential in non-travel categories. Wholesale channel net sales declined 4.1%, mainly due to greater caution among traditional wholesale customers amid macroeconomic uncertainty and changes in trade policy, partially offset by growth in wholesale sales to online retailers. In contrast, the group's DTC channel recorded sales growth of 4.7%, demonstrating greater resilience and underscoring the advantage of direct consumer connection. The proportion of DTC channel net sales rose 220 basis points from 39.8% last year to 42%. During Q3 2025, the group added a net total of 7 company-operated retail stores. As of 30 September 2025, the total number of company-operated stores stood at 1,147. The group believes that expanding and upgrading its retail store network has improved overall gross margins and enhanced brand image among end customers. Recommendation: buy at 18.5 Hong Kong dollars. Target price $20.5. Cut loss $17.6. I do not personally hold the above stock.